Alrighty, what's up YouTube? I got a video here on common stock market misconceptions for beginners. I'm gonna just let it fly. As you can see, I didn't really have too much time for production. I just want to let these ideas go, and I hope that just a little backstory about myself. I have been an unprofitable trader. I was an unprofitable trader for about 2 to 3 years. This year, I have turned myself profitable, and I just want to share with y'all a couple common misconceptions I would imagine that I know for sure for me, they made my trading worse because I didn't understand what was really going on. Not to say that I fully understand what's going on. I'd be a billionaire right now, but I have a little bit of a better understanding of the misconceptions that make beginner traders have that hurdle that they need to get over. So, pen and pad, old school. Here's the first one. Let's go. The first common misconception is that a stock's price has to do with any kind of value. That's not true. When you're looking at a stock's price, you're looking, imagine eBay, imagine Amazon. You're looking more at the price that a collective has given something. So when you're looking at Apple stock, what you are looking at is a perception of what the price of the company is. You are not looking at a direct value. So there is not a formula that is being done to the company's balance sheet, profit, whatever, that creates that price. That price is solely based on what humans think it's worth. I thought there was some kind of formula or algebra or something out of my pay grade going on behind the stock price, and that just is not true at all. Where it gets tricky at the beginning is that it has to IPO. How they come up with that price is a whole nother video. But lawyers get together, they IPO, they put it on the stock exchange. From there, it is solely what people think it is worth. What I am willing to buy it or sell it for, what you are willing to buy it or sell it for, that is what you are seeing on the screen go up and down. The second common misconception, stocks go up or down. Not true. They could go sideways. So what is sideways? It does go up, but then it goes down. But it doesn't keep going either way. It'll just keep going sideways. When I first started trading stocks, I'm like, bro, long or short, right? It could only go up or down. Not true at all. Not true at all. I used to think stocks move only because of products, because I used to think it was tied to some magical math that would make the stock price. That is not true. Stocks usually move on earnings. Now, why do you see stocks move when a new product drops or something like that? Because the assumption is the unintelligent investors are just piling in because of the price, and the intelligent investors know that this will reflect in earnings and the price will run even higher. That is it's just a misconception that I had. I didn't know why stocks went up or down, to be honest with you. I had no idea. Another common misconception, buy and hold. Now, it's just not a good idea. It's just not a good idea. Don't get fooled into thinking that that's a good idea. Why would you just buy and hold an asset that you have no idea what it does? Find out what stocks do, how stock prices move, and how companies work. And then the buy and hold is a misconception. You don't just buy and hold it because you know the company. You buy and hold a stock because of your conviction in the stock, and you know that since we discussed earlier, stock price is not some kind of certain valuation. It has to do with people's thoughts and their perception of how much something costs. You now know that you can buy it. The whole point of buy and hold is, let's say I buy a stock at 130 and I know that it's a good company poised to go higher. Maybe the market is irrational and brings it down to 90. The point is to hold through that. People have misconstrued buy and hold as blindly buy a stock and hold it for X amount of time. I would not recommend that. My favorite example of this is go look at a Pepsi chart from 1999 to 2008. From 1994 to 2008, I believe it is, you wouldn't have made money. So imagine two decades of your life, stock price goes nowhere. That's very possible. That's something that I want you to pay attention to. Another common misconception is that technical analysis is fake. If technical analysis is done right, it makes total sense. Why? Because when you are looking at a chart, you are looking at a bunch of people buying and selling at a certain price point. If you see a lot of bars grouped up at a certain price, it is because there are a lot of people either buying or selling. So it doesn't need to be support or resistance, but it is an area where price is doing something. Institutions move prices more than retail traders. I could make a whole other video about this. Look into what an institution is. Look into BlackRock. Get that whole thing down. But one guy selling all of his Apple shares is not going to make the price move down 10% in one day. Another misconception, I used to think that the buying and the selling of an option was directly from me to you. That's not true. There's a whole intermediary whose name, there is a whole intermediary in between you buying and selling the option. This is called a market maker. Behind every single options contract, there is somebody somewhere, usually a market maker, that owns 100 or so shares. If it's one contract, they own 100 shares of whatever you are buying or selling. Another common misconception that I see in beginner traders, trying to anticipate moves. That is not how trading works. You do not anticipate moves. You react to moves. I see XYZ. Every time XYZ happens, there's a higher chance of ABC happening than DFE, whatever the fuck, right? So what is the point? You make your trades a reaction. You don't just trade because you think the price is about to reverse here, because prices are irrational, because since it is human beings buying and selling that creates the price, that price is very, very easily irrational. Here is another common misconception. Trading has rules. Just like the greats in any feat in life, when you know, are comfortable, and understand rules, that is when you can begin to bend them, to break them, and still see a good outcome. Now, why am I telling you this? Most of the things that you see from trading influencers on the internet, whether it is 1,000% return, sometimes even 100% return, right? That is usually an outlier of them either going against the system or doing something super risky that a beginner trader cannot do because they do not have the extra capital to risk. Another thing is risk management. Listen, there are professions on people teaching risk management. That's a whole thing. I love risk management because aside from trading, it bleeds into real life. But you need to learn how to manage your risk for that exact reason. So in trading, there's a lot of times that things could happen, should happen. There's a lot of times where things overextend a little bit and then happen the way that you thought that they would anyways. That is a product of, there's a lot of things going on in trading. Since it's on a computer, you can code things to happen. Trading is very irrational. You cannot marry an idea. My last and final misconception is gauge your expectations. If somebody is trading with $100,000 position size, 10% is $10,000. If you are trading with $100 position size, 10% is $10. But that does not make you any less. What you do is keep getting your 10% until you have a $100,000 account. That is what most trading influencers won't tell you. Why? Because that takes away the allure of let me put up $100, get 1,000% return, and have 10 racks. It's not that it's not possible. That is as rare in trading as you walking down the street and finding $1,000 neatly placed in an envelope with your name on it. Is it possible? Absolutely. Anything's possible. Will it happen? Save this video, come back to me in 5 years, and let me know if it has. It probably won't. So that's it. Book of notes is done. Those are all of the common trading misconceptions that I have came to understand up till now. I was unprofitable for 2 years. In 1 year, I became profitable. Actually, it took me about 2 or 3 trades in order to get back profitable. What was my problem? Now that I know it and I understand it, I was trying to take $1,000 and make it into 100. Not understanding that it's possible, but it is not the most feasible route for a beginning trader to take. It's that simple. If you would like to see more content like this, like, comment, subscribe. Let me know that you would like to see more content like this. I would definitely like to come on here and start talking about trading a lot more. It's something that I find to actually be really fun. I like to talk to the camera. Leave me a comment. Let me know if I could have done something better in this video. I'm going to get a little more serious on production. I know this isn't the best stuff to look at in the background. But yeah, last thing I'm going to leave you on. I traded for 2 years. I showed up to the market almost every single day, and I lost. I didn't quit, though. Don't quit. Anything you're doing in life, do not quit. The money will come. You have to remember, trading is a skill. Not finding the trade. Finding the trade is difficult enough, and having the and being able to be concise enough to actually know that you're finding that trade, that's difficult enough. But aside from that, what am I saying? Once you get in the trade, when you press buy or sell, there's only a 50% chance that you either A, make money on that trade, B, lose money on that trade. Kind of irregardless of what the chart is telling you. Learn that skill before you quit. Learn that skill. Between us, that usually takes time. And it sucks. But hey, you can be profitable. Fuck, I'm a little stressed out and shit. But it works. It works. There's a system to this. And with trading, it doesn't have to work. But I believe you'll make it work. Thank you for watching this video.